What's going on, gang? Be forgetting to type everyone on these messages in the Discord. Cause like when you need to type everyone at everyone, you know, and then not everyone can see it. Give them a few minutes while I roll this spliff.
So I always say if you're not thrilled or satisfied, even in the becoming, you're missing the point. But there's a few things I'd like to clarify. Is there different levels of evolution between your inner being and my inner being, or is it one big collective evolution and doesn't even matter to make that separation?
It doesn't matter to make the separation, but there are lots of points of focus.
Okay, because I think other teachers will teach you there's all, you talk about shifting, but it seems maybe for simplification, you sort of kind of focus on one reality that we're all sort of co-creating, whereas other people tell you, well, there's all these versions of you that you sort of kind of tune in like a TV or whatnot. Follow me all up to that point? If there's different realities and it matters just what I focus on, then that's great, because if I know someone was, say, being raped, but I'm not focusing on them, then the tree's not falling at all. It's not even happening. It's not just that I'm putting my head on the ground. Could you clarify that for me? As opposed to, I'm just not aware of this reality that's still happening.
In order to make sense of this, it's important to understand that at the basis
Give
of
everybody a
everything
couple
you
more
want
minutes
is
to
a
come
feeling.
in.
Everything that you want is for the feeling of the energy flowing through. And
What's going on, gang? Hope y'all ready for the new week.
what you were talking about earlier, we want to touch on that first. So which is it? Life helps me know that I want these things, and then these things become a bigger idea, and then the idea occurs to me, and now I'm ready to proclaim to the world, I want this. I desire this thing. At that point of the bursting forth of that desire, there is an energy rush that really is what you're all looking for all the time. So the optimum life experience would be to be able to keep yourself in the position where you could be translating the things that you've been asking for into the idea and into the idea and into the idea. The only diminishment of life is when you take that idea that now is flowing and for some unnecessary reason slow it down. And the reason that you slow it down is because you want to make it a reality now, and since it isn't a reality now, then you introduce lack or doubt into the equation, which doesn't allow it to keep going. Does that make sense to you? We're going to try to demonstrate it. So contrast helps you know that you would like to have this, and 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 this. And a lot of what you're living, because it's your same point of attraction, is putting a lot of similar things into your vortex. So here your vortex is, it's accumulating all of these things that you're asking for, and you are not even all that aware of what you're asking for, because life's coming fast and it's stacking up, and you can't really identify the pieces that you're putting in there, not really. But these pieces are becoming wholes, and these pieces and wholes of pieces are gathering cooperative components, and so there's quite a business going on here. In other words, there's something really
No,
remarkable
you
that
can't
is
see
happening
me.
that your inner being is just crazy for. Your inner being is just
Okay,
loving
bye.
the becoming, because it's the
right
evolution of
there.
the spirit, it's the evolution
Don't
of
go anywhere.
the whole, it's the evolution of
Don't
all
go
the
anywhere.
beings. It's the evolution of this leading edge
Don't go
time and
please.
place. In other words, this is what you came for, this is what you're doing. It's all right on track. It's wonderful, wonderful, wonderful. So here it is, becoming,
I'm
gestating,
done
getting
with this.
ready
I'll
for
be
you to
nice
get
and
ready
hungry.
for it.
Eat my food.
And you are ready for it.
I'll go to my bed.
Because
I
you've been
like
tuning in,
Yes.
you've been appreciating, you've been looking for positive aspects
been a
and things,
while.
you've been meditating, and you get a glimpse of it that is just
straight
You got no other one?
intoxicating for a moment.
What, you on?
The key
That's it,
in all
got
of
no other one,
this is
no
to
one.
keep yourself
We could try
as
to
best
see.
you can in that place of receiving the next idea
I'm pretty
and the
sure
next idea
we
and the
watch
next
every
idea
single
and the
one.
next idea. And when you reach the
Yeah.
place that you are hooked on the idea and you don't need the manifestation, then you'll have it, because then you'll always be in that sweet spot. Then you'll always be experiencing clarity. And
All right, let's give some people a few more minutes and then let's get it going.
strangest thing, all those manifestations will be raining down around you. And those who are watching it from the outside will think that your high is about the stuff. They won't understand that your high is about the high, and that the stuff is a consequence of that.
Absolutely.
We've been talking about this for a while in this.
Yo, what's going on, E? Not getting active right now, just redrawing, bro. Re-showing the price, you know? I don't usually trade like the overnight action, but maybe if we see something, but nah. We're just redrawing from Friday so we can be familiar with what price has been doing and, you know, staying on point. Getting ready for the week.
And we think this is a good way to bring this all into a culminating place for you here today. If you need the thing to promote the feeling,
So these are all the indicators we put on our chart, right? I put one EMA. I put, well, we don't need the tick counter right now, but I usually put the tick counter right. And then also we put current day open, high, and low. And all this does, right, is show us the open, the low, and the current high. Yes, sir. Gotta stay on track, bro.
you just can't get there.
Alright. Let's get it going, guys. Let me play. Today we're gonna listen to some Mark Douglas. Marky Mark. DJ Mark Douglas.
Full potential. In other words, there's a negative correlation between what the trader ends up with and what he could have had. Written 2 books. Market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader.
Let's
Here
get
to
it.
talk to you about what you need to do in order to put your mind over the market is Mark Douglas. Mark has been a successful trader since the 80s and has written 2 books
just Robin,
on
what's
trading
going on?
psychology, both Trading in the Zone and The Disciplined Trader. You've heard me talk about them many times here on WTV, and he is here today to help you become successful traders. Mark, good morning. How's it going?
Good morning, Jared. Glad to be here, and I hope I can be of assistance to some of your traders who are viewing right now.
Mark, last time we were together was at Wise Fest, and had a lot of fun. I'm really excited you're here with me today.
Thanks.
So let's get started. First of all, one of the things, one of
Mike's
the main
like,
things, one of the
okay.
main issues that I see all the time is that people don't use their method to its full potential. In other words, there's a negative correlation.
Yes, sir. Exactly. That's ma'am. Yep. Coming in, listening to some Mark Douglas, and we're gonna chart up Friday, right? Just to make sure we staying on the right side, following our rules, kind of, seeing what price did last time, so we're even more aware. Let's go.
Between what the trader ends up with
Yo, so
and what he could have had if he just followed his methodology.
what you want?
In your DVD program, you refer to this as the profit gap. This is a problem. You refer to it as the profit gap. And I think it's one of the least understood concepts
You need to turn it
of
back
trading.
on.
Can you address this a little bit? This profit gap?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to
there you
produce
go,
an
good.
income that that they can rely on from their trading. And I'm sure that many of your viewers have already realized that that's getting a steady income is not such an easy task.
Yeah.
Definitely not an easy task. Okay, so last little thing I'm gonna add. What I usually do is I draw a line at the low, and I usually color it like cayenne, and then I usually copy and paste it too, and I like this at the high. Now I usually get on the chart about, let's see, like 8 something, 7 something. So right here I'd probably be getting on the chart. So let's start drawing from here. We start following this, right? And I just start following the price from the rip, just to start to be on the right side. I got come on right here. You can kind of see it's valid there. See, we're kind of holding, right? So even if just from right here, we know we're gonna start here, but I still keep following it from the rip. Here we go.
And everyone seems to get trapped thinking that because trading is easy,
Right.
or because it's easy to find yourself in a winning trade, which
Exactly.
many people do.
Right.
That they think it's also easy to become a consistent winner.
Right.
And it took a long time before it actually dawned on me that winning and being a consistent winner are two completely different animals, two different things. And in some ways, there isn't even a relationship between the two.
It almost seems like there's no relationship between the two.
Yeah.
That's what you're saying, right?
Yeah.
Yeah, that's a real hard mental barrier to break through. Mainly because, it's so easy to find yourself in a winning trade because winning actually requires no skill at all. In other words, unless you consider that the being able to click a mouse button or tap a pad is a skill,
Right.
and we don't have to have a reason or good reason or even actually any reason to put your cursor on the buy or sell button and then immediately find ourselves in a winning trade. And it could be a monster of a winning trade. And what did it take? What kind of what kind of skills did it take to actually experience this? Absolutely none.
Yeah, so it'd be natural to take the leap from, well, if it's this easy to win, it can't be that much harder to make a steady income. Like you said, it's that easy to click the mouse and for me to sit there and make $5,000 or $10,000, then it must be pretty darn easy for me to sit there and make a living out of this. And that's what I thought for a long time, but that is not the case.
No, and that's exactly how I started out too. And I know, not unlike a lot of other people who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle there?
Well, we're gonna get into that, but at the most general level, I'm gonna say that it requires learning the type of skills that people just simply aren't used to learning.
Mental skills.
Mental skills, yeah, exactly. In other words, it requires mental skills. Most people assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income, not taking into consideration that the proper execution of those signals requires mental skills.
Give us an example of this.
Well, take for an example, a high school basketball player who, he'll go in the gym and practice throwing his free throws, maybe for even 2 or 3 hours a day. It wouldn't be unusual for him to be able to hit 50 in a row, would it? I mean, that's
You
not
see that all the
out of
time.
the realm of reality, right? Okay, so the problem is that could he even hit 2 in a row if the circumstances were he was in the final game of the NCAA championship, his team is down 1 point, there's only a few seconds left on the clock, and he was just fouled.
Changes everything.
Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those free throws is very unlikely. And regardless of how well someone could do it in practice, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case, of throwing the ball, in our case, obviously, of trading or following your method,
Right.
and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right. Just like what I'm going through right now.
You're
Trying
on
to stay
TV.
focused. Yeah, trying to stay focused on the process of this presentation and not blowing it.
What are you doing? Fantastic. by the way.
Anyway, with trading, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method or trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear.
Okay. That's interesting.
So you see, no matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take
Yo, what's going on for this? Yo, what's going on, Gav?
loss that ends up turning into a bigger loss.
Right.
And that's happened to everybody. Okay.
Yo, Gavin, we rejoined the price, rejoined the chart from last Friday. Just going through it again, seeing what we could have capitalized on, what we could have seen better and all that.
Our method can't prevent us from moving a stop closer to our entry point where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit.
I know that all of our traders have experienced these issues. I know they have, and I think really what you're saying is that the methodology, and this methodology, folks, what we're talking about, we say the word methodology is the Wise Trade software, that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give us consistent results if we're susceptible to making the kind of mental errors that you're talking about
Right.
here. Okay?
Exactly right. Yeah, that's exactly what I'm saying. And all the mental errors I just listed are the result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that. Technical methods and patterns are designed to put the odds of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be or what the sequence of wins or losses will be over a series of trades.
It's a mouthful. and I understand what you're saying. I think, we need to, first of all, know that many of our viewers out there are experiencing the same sort of thing, okay? And they're probably going to have some trouble grasping this concept that by accepting the randomness of these outcomes, they can produce consistent results. That's an odd concept.
Yeah, that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events that have a random outcome can produce a consistent result, but think about it. This is the principle that's been used by casinos for hundreds of years.
Right.
Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player, if the trader can think about it from the proper perspective. On the other hand, if a trader who has generated his signal from a technical method hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he'll undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
And I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm not sure if they're making the connection that the reason because they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique.
Right.
they have to be able to view that as random and unique. You know, that's I think the big issue.
No, I know, and that's why we're here explaining it right now. You see, the frustration comes from our expectations. It's from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior.
Right.
Now, the patterns definitely exist. They repeat themselves over and over again. The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what I'm saying is that, yes, we have patterns, yes, and they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent, I should have an outcome that's consistent with the pattern, and that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern.
Right. So, and if the last trade was a winner,
right,
this trade, even if the charts are the same,
right,
even if we've got the same exact signal, the same looking chart, there's no guarantee that this trade is going to be the exact same as the past one.
Exactly. In other words, this trade, the trade I'm in right now, could turn out to be a winner, and does that mean that the next trade's going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser, and does that mean that the next trade is going to be a loser? No, absolutely not.
Yeah. This is interesting. I mean, I'm trying to, for us up here, you know, the goal, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, you know, let's again back up here for a second. There are traders out there using WiseTrade every single day. They're getting the same exact patterns, okay? But what you're saying is, even though the specific criteria is being used to identify the pattern, okay, for each signal, same criteria, same formula, same everything.
Right. The chart pattern can look exactly the same. Everything.
Right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses over any sequence of trades that you might look at. And so, you know, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learn how to think in what I call probabilities. Okay. They're the ones that don't experience the same kind of, you know, the same kind of emotional trauma that the typical trader does, because they're expecting something that just may not happen. So for an example, if this trade's a winner based on this particular trade I'm in right now, based on the exact same criteria, that
Yo, what's going on? About to deal with my pre-market just to hail you fast. Yo, wagwan, brother, wagwan, juju. There. Yeah, bro, deal with the pre-market. Do what you gotta do. Get in the rhythm.
you know, or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect it to be a winner if it was a winner the last time. Or I probably will naturally expect it to be a loser if it was a loser maybe the last time, or we had 2 or 3 losers in a row.
And this could be a source of frustration for traders.
Oh, absolutely. In other words, and that's exactly what happens. It is a source of frustration, because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy that I put into the idea that the trade is going to be right.
Well, how do we get over that? I mean, how does a trader take, okay, so I've got all the things right. I've got my charts lined up. I've done everything I was supposed to do. How does the trader at least begin to accept these sorts of things, or how do they begin to remedy these issues?
Well, here we kind of have to get into the nuts and bolts of this, of just exactly how the markets work, because I think that one of the big problems, one of the reasons why people have such a difficult time with this, is because their initial exposure to the markets themselves is through electronics. Right. In other words, there's through electronics, there's a real disconnect between what you're actually participating in and what's causing you to want to participate in the first place. In other words, markets started as exchanges. Right. And there were, and so when you traded at an exchange, so you know that all prices are people-generated events. Correct. They are, and see, this is what people have to take into consideration. Everything happens because of what people believe. When you look at the nature of trading and break it down to its simplest components, what you have is everyone trying to do the same thing. There is no possible way that any of us can make money as traders unless we can buy low and sell high, or sell high and buy low.
Correct.
Is there any other way, Jared?
No.
No other way.
In every market.
In every market. So basically, everyone's trying to do the same thing, are they not?
Yes.
Everyone is doing the same things. Now, the reason why we have price movement is because everyone has a different idea about what is high and what is low. Okay,
Right.
so now I get exposed to a technical method. Now, what does this technical method do? And this is the relationship that people need to grasp. If they grasp this relationship, then they can grasp this idea that you can take the same set of criteria and end up with random results. And it's this. It's like what people realized years ago is that you can take data points. In other words, data points meaning what you're doing is you're translating the human the human behavior, the human belief in if I'm going to buy
into something visual.
What's that? No, it doesn't have to be visual, but it's like it could be. Yeah, it started out being visual. It started out being chart patterns based on bar charts. But what you do is that if I'm going to buy, it's because right now, let's say the last price is 10, and I put in an order to buy something at 10. Okay, it's because I believe that the market's going to go to 11 or it's going to go to 12. Certainly, if I thought or I believed it was going to go to 9, I would wait. Would I not?
Correct.
So the reason why I'm buying at 10 is because that's what I believe. In other words, all price movement is based on people's belief about what's going to happen in the future.
Now you said to me in a conversation we had yesterday, obviously we as individual traders are not large enough in our accounts to move the market.
Exactly. And
Okay.
so this is the next connection that people have to make is that since all price movement is based on people's conviction or belief about the future, how do prices actually move? For an example, when you put in an order or I put in an order, I don't trade at a level where I can actually move prices. But what the typical screen-based trader doesn't understand is that there are thousands of traders out there who do move prices, and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out, meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12.
Yeah.
Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite. And this is really critical. They are doing the exact opposite in that moment of what it takes to be successful.
Okay.
They're not buying low, they're buying high. They're
Okay.
buying high relative to the last price. Or buying higher relative to the last
So how
price.
does understanding this concept, how does understanding what moves the markets help our traders to take it to the next level? Is this the first step for them getting control and understanding how the markets work and getting a grasp?
They definitely have to understand. They have to understand how prices move, because when they understand how prices move, then
Yeah, doing Zoom, I think Monday, Tuesday, Wednesday, Thursday, doing Zoom. Friday going back to Skype and YouTube. But always on YouTube. But just message me for the Zoom, bro. I got you, Gavin.
understand how their technical method
I gotta say,
relates to this movement, because what technical methods do, whether it's a visual pattern or
I gotta send you the Discord link too.
averages or any wise trade or whatever, you're using mathematical formulas. Okay, you're taking data points. In other words, you're taking what people believe about the future, transforming them or transposing them into a data point as a price over time. Okay, or with volume. There's any number. There's any number. That's what it ends up being, is a fresh cross. But I'm talking about the actual mathematical formula that makes the fresh cross. Okay. So there are any number of variables that go into this equation. Now, what people have found is that, and this is here. What people have found is that using these data points into certain types of mathematical equations, you can find patterns in collective human behavior. And what these patterns mean is this: is that when this set of criteria, okay, is present in the market, that there is simply a higher probability than not. In other words, there's a higher probability, or what I'm going to call an edge, a higher probability of one thing happening over another, that other people are actually going to come into the market and bid it higher from here or offer it lower from here. There's just, in other words, when the pattern is present, this collective pattern is present, it will repeat itself. But the problem is that it repeats itself on a random basis, because even though the actual mathematical criteria is exactly correct or exactly the same.
You can't. Mathematical models can't predict human beings.
That's right. Mathematical models can't predict who the actual individuals who are going to come into the market and actually do it.
Right.
In other words, it takes someone to do it. When you put on a trade, if you're not going to make your trade a winner by bidding the market, if you bought something by bidding the market,
using all of my money,
using all your money you bought something at 10, you could actually wipe out all the offers and bid it to 11 or bid it to 12 or bid it to 13. Now, if the price is at 13, all the trades that you put on at 10 are winners, right?
Yeah, but I still bought it at 11 and 12.
Yeah, but you're averaging up. But the point is, all the trades that you put on were winners. You actually made yourself a winner.
That's correct.
But what I'm saying is that when you don't trade at that level, we are actually obliged to other traders to come in to buy something at a worse price than what we thought was low to make us winners.
So what you're saying is most of us out there are dependent upon someone else
exactly
to move the market for us. We're trying to identify that pattern, obviously using the Wise Trade software to find those common entries. But again, it's a random event. We're putting the edge, you said, in our favor.
Yeah. Jared, when you put on a trade, when you put on a trade, do you know who, now what we've done, we've reduced the market down to these terms, that it takes someone else to make us a winner, right?
Correct.
Okay, when you put on a trade, you think about who that might be, who might come into the market to actually make you a winner?
No, of course not.
Yeah, no. And if it turns out to be a winning trade, do you know who those traders were or who that trader was that actually made you a winner?
No.
Is there any way to know?
No.
There might be, but it'd be pretty hard to find out, right? I mean, you could go to the clearing firm, the firm that clears the
bottom line is
bottom line. Yeah, exactly. So what I'm saying is that when the pattern presents itself, like, okay, I have an edge here. When the pattern presents itself, we don't have any idea of who is actually going to come into the market to do this for us. And so there's no point in analyzing. There's no point in judging. There's no point in trying to figure out whether it's going to work or not. It would be like, for an example, if I said to you, Jared, I'm going to give you a coin, and this coin is weighted in a way where it's going to come up heads 70% of the time. Okay. Now, just because I know mathematically and statistically that this pattern of coming up heads 70% of the time exists, is there still any way for me to know the actual sequence to heads to tails?
Of course not. It's an infinite.
Well, no, I'm saying, do I know the sequence? In other words, I'm going to flip the coin 100 times, and statistically it's going to come up heads 70% of the times. I still don't know which
times
flips are going to
come up heads.
Which flips are going to come up heads. This is which flips. It's not the times. Right. Which ones? In other words, we flip the coin once, it comes up heads. Flip the coin twice, it comes up heads. The next one's tails. The next one's tails. The next one's tails. In other words, we could have streaks of heads or tails. Okay, we could have streaks in there. The point that I'm making is that there's no way to know the actual sequence.
But at the end of the day, we know we have 70%.
So what that does, that obligates us, if we want to be able to trade our methodology in an effective fashion, to be able to utilize this methodology in a way where we can extract the maximum amount of profit that it makes available to us based on the pattern that it identifies. We have to do it in certain ways. In other words, our mind has to be free to be able to execute these trades without making trading errors. And the trading errors come from believing that because the pattern is present, that it's going to give me a winning trade on this one. This trade is going to be a winner.
You can't think that way.
No, you can't think that way.
Can't think
That's the way the typical trader thinks.
Right.
The typical trader thinks, I'm not going to put this trade on unless I think it's going to be a winner. Or why would I do it? And it skews our expectations. See, it messes our expectations.
Well, let's back up a couple seconds here. There's some great stuff here, Mark, and I hope our traders are getting all of this. You're basically saying, this makes a whole lot of sense to me, and I hope it's getting through to you guys. We have a tool that gives us an edge, whatever it is. Even if that edge is 2% or 3%, I don't know if we can.
No, it's more than that.
Maybe more than that.
Well, what do you mean more? There's a lot more than that. It's far more than 50%.
Well, I was saying greater than 50. I was using edge is defined as so maybe 55 or 56% of the time. Right. Let's just say.
And the thing is, it doesn't even have to be 50% to actually make consistent money. That's what people can realize too. That depending on what the ratio is between what you have to risk to find out if a trade is going to work and how much profit it generates when it does, you don't even need a 50% win-loss ratio. Right. As a matter of fact, back in the 80s, there are one of the most famous traders from the 80s, Richard Dennis, on a percentage basis, 95% of his trades were losers. 95%. But the 5% that were winners were monsters. And he was able to put on trades at a 95% loss ratio and make at the most at one point, and I think around 1987 or 1988,
No.
he had
Alright, bro, I'm gonna hit you up. Look at this girl, Alright, bro, good stuff. Yo, who could have a 95% losing win rate? Who could have that? What do you guys think? Losing 95% of the time. That means if you take 10 trades, you're gonna lose
8.
more than 8. Yeah, you might even lose 9. Could you handle that? Could you be like, yeah, I'm gonna run this strategy? What you guys think? Let me get some threes. Who could run that? Actually, let me get some threes if you couldn't, because I don't know if I could run that one. But you would have to, right, if that's your strategy. What y'all think about that?
What do you mean I can't run that?
95% losing strategy? If you're just starting off trading and you don't know what that is. Remember, you're gonna be losing
Yeah.
8 times. You would be like, nah, this is not
Uh-uh.
working.
There.
You'd be like, no way, this is working, man.
Come just do so like experience and experience, you
Yeah,
know?
you gotta be experienced, right?
Bruh.
To be losing 95% of the time.
$1 million.
Is that using his
Crazy.
edge or his money management or a
A
combination,
combination
of
of
both?
all of it.
Okay.
And see, one of the things he did too, and this is something I ought to really qualify with, he would use orders to actually probe the market. See, there's one of the things, I don't want to leave what we're doing right now, but I'm going to just kind of divert just for a moment,
Okay.
and so that people understand that one of the first things to be a successful trader that you have to learn, other than the fact of finding a good edge, meaning something that puts a pattern, a collective pattern that your edge identifies, that puts the odds in your favor, that there's a higher probability of one thing happening over another once this pattern is present in the market.
95% losing strategy is ludicrous. Crazy, right? 95%. But this guy made millions. It's like, yo, what? You just gotta believe in your strategy, man. If that guy can do it, yo, come on. What the Christ did? What's wrong with you?
Still find the road.
Yeah. So y'all can definitely do it. Okay, real quick, I wanted to add this top right here, this green arrow, that's for the top of my 15 minute. The red arrow is for the bottom of my 15 minute. Just want to add that in. So I'll always play those, right? I'm either looking for some rejections off them or I'm looking for them to potentially break, right? Or come in as support. You can see down here the bottom of the 15 minute coming in as support. Up here I thought we would break, right? So 9:30 starts right here. So I'd be just looking. Might not even take this trade because it's so close to the open, but I might check it out. That's why I make it yellow. Yellows are the ones that I like debatable think about. Greens are more so the ones that I like. I've been changing. This one should be good. So yeah, we'll keep bumping, but I just wanted to add that in case you're following along. And then notice, what's it called? The top blue here, I leave it. So I want the high before 9:30. After 9:30, I just leave it there to see it come into play for the rest of the day. Also the low, I don't move this low here. They would basically be locked in, can stay here for the rest of the day now. What do you say? Remember that book, The Biggest Loser? Yep, you gotta. No tossing. Lord have mercy. Yeah, that would be crazy, right? That would be crazy. 100%, I think that would be crazy, bro. 95% losing strategy. Like, holy shit.
From jump.
From the jump.
Is that you have to learn how to think in probabilities. In other words, you have to get your expectations,
But if you knew
aligned
that, though,
with the
and
way
you knew what
the
that
market
took-
actually exists.
Right.
And,
Right.
and when you do, in other words,
After
when
you know.
when you learn these kind of mental skills and you're able to execute your trades without fear and without hesitation, without analyzing, or even without thinking for that matter, because you don't need to think. I'll give you an example. A professional trader, what a professional trader thinks about when there's an edge present is, does he think about whether the edge is going to work? Absolutely not. Because he knows he has learned there's no point.
Right.
There's no point in analyzing or judging or building a case for or against whether that trade is going to work.
See you take it
Because he understands the human component, okay? But what he does think about is he thinks about the risk. How much do I have to risk? How far am I going to let the market go against this position to tell me that other traders are either going to come into the market and make me a winner or not? And he also has a plan for how he's going to take profits.
Right.
But the typical trader, what does the typical trader do?
They don't have a plan.
Well,
or
they
they
usually
think
don't
about
have
the
a plan.
trade too much. They think about, is this going to be a winner? Is this going to be a
That's
loser
right.
for me?
The exact opposite of the professional.
So what the professional does is basically...
And then once they make up their mind that it's a winning trade, they don't predefine the risk, do they?
Right.
And they also don't have a plan to take profits because they think when
They think
they're
it's gonna be a
winning trade, it's going to go on
And
forever.
I want to talk about that. We're running up on the break here, but I want to talk about that on the other side. But what you're saying is the bottom line is the professional sees the entry. He sees the pattern, whatever it is, the edge, enters in, not thinking if I'm going to win or I'm going to lose, but has a money management strategy in place, knows exactly how much he wants to win or is willing to win and how much he's willing to lose or risk.
Right.
Now, does he put a cap on the upside? Does he put a cap on his win side?
It's not a matter
Or a
of a
goal?
cap. It's a matter of how his assessment of how much potential there is. In other words, see, the problem is on a winning trade, we're obligated in a sense to make these never-ending decisions as to what the risk to reward ratio is. In other words, as the market's going in my favor, what's the risk of finding out that it's going to go further? And that's why so many professional traders or people who teach trading advocate scaling out of positions.
Right. Mark, this is all great stuff. We're going to have to wind it up. We got to go to a break, guys. It's already time, as I said, for a break. We'll be back with much more with Mark Douglas here in 3 minutes. We'll see you soon here on WTV. Welcome back to the WTV special on putting your mind over the market. I'm Jared Levy. Mark Douglas has been talking about psychology in today's market. Mark, let's continue with our conversation we left off with. We were talking when we left about the flip of a coin. And you said that you had a coin that was actually weighted on one side. You gave an example how a coin was weighted on one side, and over a series of flips, that coin had a 70% chance of, in this case, landing on heads.
Right.
Whereas in our software, we give you the edge, and maybe with our software, you have a better chance of being right or having a winning trade if you get in on a certain pattern.
Right.
You also talked about how
It's the word "right" that's really critical here. Okay.
Right.
It's the word "right." In other words, what people need to understand is how does believing in a random result affect your expectations? Because see, what we don't want is we don't want to get into trading with the possibility of being disappointed, or the possibility of being dissatisfied, or being even betrayed, because a lot of traders feel that way. They really feel betrayed. And the problem is that when that potential exists, it has the effect of affecting the way that we see market information in detrimental ways. Because, in other words, all of us have these mental pain avoidance mechanisms that affect our perception of information. Right. So, for an example, if I'm in a losing trade, and I got into this trade thinking I was going to be right. Okay. In other words, I did all my evaluation, I did all my analysis, I did my work, I built a case. Right. It's like as the market's moving against me, I'm going to have the tendency to focus on information that tells me that I'm right and ignore the information that tells me that the market is actually trending against me. Okay. In other words, I can identify a trend, but I won't be able to identify that trend if I'm putting an inordinate amount of significance on the information that's telling me that I'm right, as opposed to ignoring the information that's telling me that I'm wrong. And see, and overall, if we want to be consistent, the principle that we need to keep in mind is that to be consistent, we have to cut our losses and let our profits run. We have to make more on our winning trades than what we lose on our losing trades. And the problem is that if I'm susceptible to being disappointed or betrayed, meaning I get into a trade, expecting it to do what I think it's going to do, that I'm going to have this tendency to distort market information that causes me to hang on to my losers And in a winning trade, what will happen is that instead of letting a winner run, markets don't go straight up. In other words, if I'm in a long trade,
Right.
I would like the market to go straight up, but they don't. They go up and they come back and they come, and it's the retracements we focus on instead of the fact that the market's still trending in our favor.
So what you're saying right now, basically, is I found a stock, for instance, that I love. The stock just had a great news story. The charts are the same as the other stocks I've traded, but just for some particular reason, I feel great about this stock. Don't know what it is, but maybe they had some great news out, and I feel that stock starts to go against me. You know what? Based on the news that's out there, based on the special feeling I have about this stock, I continue to hold my loser. I continue to hold my loser until this thing draws down against me, and I'm in a major losing position. And I keep losing because I feel in my mind that I had some sort of special. This stock was special. Is that what you're referring to?
Yeah, it could be anything.
Because I know traders do that.
Yeah, I know. It could be any variable kind of information that people latch onto.
Okay.
The thing that they have to understand is, regardless of the reason that they got into a trade, it doesn't. Regardless of the reason, if other traders don't buy into that reason, or if other traders don't have another reason to want to buy at a price that's worse than yours. You bought the stock at 10. Someone's got to want to buy it at 11. Someone's going to want to buy it at 12 and buy it at 13. And not only be able to buy it at 11, 12, and 13 and 14, they're going to have to take out all the offers, all the traders who think it's high. In other words, at 11, 12, and 13. And so if these people aren't coming into the market to do that, well, then whatever reason you thought you had might not be so good.
Right.
And so that's why it's so critical to predefine your risk before you even get into a trade. And that's why professional traders don't think about it any other way, because they know it takes other people. My reason might be great, but if someone else isn't buying into it, what difference does it make?
Matter.
It doesn't matter, because it's not a winning trade. And so, if we have this susceptibility to be disappointed, what it does, it affects our perception of market information in a way that doesn't allow us to cut our losses.
How do we make ourselves not susceptible? I mean, how can you
by changing your perspective on this, by really understanding. For an example, Jared, you ever played a slot machine?
Yes.
Okay.
Now, I don't like it.
Okay.
But I played it.
Whatever reason you don't like it, doesn't matter, okay? That's good that you didn't like it, because it might make the example even better, okay? Okay? You play a slot machine. When you put your money in the machine, let's say it was a quarter machine, okay? You put your money in the machine, you press the button, and the pattern indicating that there's a payoff doesn't show up. How do you feel? Well, do you feel betrayed? Do you feel betrayed by the machine?
No, not at all.
And why do you not feel betrayed by the machine?
It's just a random. It's a
random outcome. Okay. So in other words, you went into it with the belief that you know that you're participating in an event with a random outcome.
Right.
And as a result, your expectations about the outcome were in perfect alignment with the event itself.
My expectation, believe it or not, was to lose. I know this sounds.
Swaggy C was talking about a trader who lost most of his trades, but his profit was more in profit 1 to 11, hitting 1 TP. Yeah, that's fire, right? That's crazy, yo. You just got, like I said, you gotta know your strategy, stick to it, right? Because you just never know. Like he's saying, random. I think the more we look at trading, we see what our thing is, right, that we really should work on mostly too, is like he's talking about right now, expectation. You just should have like a flat expectation, you know? Have a plan, have what you think should happen, but then otherwise just be flat about it. Like, oh, I'm in the trade, okay. I trust myself that I know, you know, I would have taken the right strategy, stuff like that, and then just be chill about it. Let it be. You'll be good. But yeah, man, if you got your plan, just stick to the plan. Just be cool about it. Take your trade. You know, your job's not here to win or lose. Your job is just to enter, man. Enter when you see your setup. And then just keep it chill, like I said. It's even better when you keep it chill, because, hey, you win, great surprise. You lose, oh well, you knew it was random. You knew you accepted the risk. You know, especially if you just started trading. When I first started trading, and I still kind of do it now, in a way. That's why I could be a lot more better about my trades, right? I used to just see my trades as I just lost that. I just lost that capital. You know? See it as a loss. That way, when I win, it's like a good surprise. You know? But when I lose, I could have never said like, oh man, how could this happen? That was the first thing I thought. If anything, this is a loss. I knew I didn't know what I was doing. I was still learning, and I know I'm still learning today, and gonna be probably every day I'm on this thing, right? This lovely game we call the market. I'm gonna be always learning. If you think you're gonna be just, staying the same, oh no. So man, just, whatever you gotta do to trick your mind into accepting that random result. And, still knowing that you're safe, whether you win or lose.
But when I put the quarter in, I thought, you know what, I'm probably going to lose this quarter.
Yeah, exactly. Okay, because the odds aren't exactly in your favor, and what trading systems can do is actually put the odds in your favor in a way where we own the machine. Believe it or not. I mean, this is the whole role reverses if you learn to think about it correctly. In other words, if you understand that, so for an example, well, let me backtrack a little bit and say that most traders, if you compare trading to a slot machine, the difference would be that with a slot machine, we can't play until we've accepted the risk. In other words, we actually have to take our money out of our pocket and put it in the machine, or otherwise we can't play. Right. So that implies that we've accepted the risk, because the degree to which we have not accepted the risk, we wouldn't be able to put our money in the machine. That is our loss. The quarter is our loss. That's the risk. No, that's not our loss. That's just the risk. That's just how much we're willing to invest to find out if it's going to work. Okay? And then what we do is we wait for a pattern to show up. And if the pattern's a jackpot, great. If it's not, then we might be willing to put another quarter in the machine to find out if it is. The difference with trading, and this is where people's mental idea of what this is all about gets messed up. The difference with trading is that the pattern shows up in the market. The pattern shows up first, okay? Then what we have to do is put up our money. Meaning, how much am I willing to risk to find out if it's going to work? But most traders, because they evaluate, because they judge, and because they analyze, they think that and build a case for the pattern being right, they actually talk themselves out of believing that the risk even exists. They might give lip service to the idea of putting a stop in the market, like some of those errors that I said in the beginning. Right. How many people put stops in the market and take them out, and then let what would have been a small losing trade go into a big losing trade? That's lip service. You see, well, okay, I've been told over and over again I got to put stops in the market, so I'm going to do it. But they haven't really accepted the risk.
You see it every day. Every day.
Yeah, they haven't really truly accepted the risk because they don't want to be wrong. And what they have to understand is that this is not a right or wrong game. This has nothing to do. Trading a technical methodology or a technical pattern does not have anything to do with being right or wrong. It's just an odds game. That's all it is. In other words, you get an edge that says I've got the odds in my favor over a series of trades, but you've got to be able to take every single trade because you don't know the sequence to wins and losses. You got to be able to identify what your risk is, and that's simply how much am I willing to spend to find out if other traders are going to come into this market and bid it higher than my price or offer it lower than my price if I sold. That's all it means. And then, of course, you have to have a money management plan for how to take consistent profits.
Right. Which is another problem all in itself.
Oh, yeah. But see, the thing is like when you change your perspective, when you change how you think about this, okay, it's like I know there's a random outcome to these patterns. And so I know it's not right or wrong. And so what potential do I have to get disappointed? No more potential than what you had to get disappointed by putting a quarter in a slot machine and it didn't come up with a jackpot.
Right.
And see, this is the critical thing here, Jared. You got to be able to change the way you think. This is what's the title of this program? Mind over markets. Okay, you got to be able to change the way you think.
And how does a trader do? I mean, what are the steps? I mean, is there obviously by reading your books, by getting themselves immersed in your thinking, is certainly a way to do that. Is there anything from this point forward a trader can begin to do, or thoughts that traders can try to add to the repertoire to begin to think like a professional trader, have that carefree state of mind, and start to change the way that they view the markets and their risk? Is there an exercise that
Yeah, absolutely. I mean, there's an exercise in trading in the zone, exercises in how to think like a professional trader, and basically all it really takes, Jared, is simply a sincere willingness to do it. Honest to God, it's just like anything else in our lives. When we realize that there's a particular goal that we have, and there's a strong desire to achieve that goal, then we're going to take whatever steps we need to achieve it. Whether those steps are trading in the zone or how to think like a professional trader or some other methodology that people are more comfortable with or whatever. The point is that if someone really sets their mind, any of us, when we really set our mind at getting something, we'll get there. We will get there, but the difference is, like we started out in the beginning of the program, the difference with this is that what we have to set our mind at is how to change our mind. Okay, and that's why there's so many people who are so close to getting it, but never really get beyond that threshold.
That hurdle? Why can't?
Because people don't want to change the way they think. It's that simple. People don't like changing.
How can people get to the carefree state of mind that you talk about?
By changing the way that they think. They've got to eliminate the potential to think that the market's going to disappoint them. They've got to eliminate the potential to think that the market's going to disappoint them. And the way they eliminate that the potential is by understanding that trading is not about being right or wrong. It's a probability game. If you're trading technically. Now, I don't want to confuse people, but I got to say something else. Is that traders do
got an
evolve.
hour and a half, by the way. Keep going.
Do? Oh, okay.
The
Not long, honest to God.
Go ahead.
Oh my. No, is that there are stages of development. In other words, and I think I started to talk about this in the last segment, is that there are stages of development. That we start out learning these fundamental skills, like learning how to think in probabilities, so that the market doesn't have this potential to cause us to feel emotional pain.
Right. We did everything we could. We had our edge. It didn't work out.
That's right. And that's all it is. When you put on a trade and it doesn't work, all it really means is this: is that some of the traders didn't come into the market that had the same belief that you had, or the same conviction that you had about this market doing whatever it is you thought it was going to do. That's all it is. It's nothing more than that.
And you have to learn to walk away.
You have to learn to walk away. I mean, let's put it this way. How good do you think the average person is at predicting other people's behavior? Someone else's behavior. People aren't that good at predicting other people's behavior. Or even their own behavior, for that matter, okay?
Exactly.
They find themselves doing things that, what am I doing this for, And so how good are they going to be at predicting collective human behavior? Now, the methodologies that we have access to, these mathematical formulas, do that for us.
Right.
But you have to understand that there's no possible way that these mathematical formulas can predict the outcome of these patterns on a trade by trade basis, only on a series of trades. In other words, what they're really saying is that I have the odds. So when I get a signal from my methodology, at the very most fundamental level, what this is telling me is that
fresh cross.
Fresh cross. There's a higher there's a high, or let's say, the odds are in my favor. The odds are in my favor that somebody is going to come into the market. This is what the pattern means.
Right.
The odds are in my favor that somebody is going to come into the market and bid it higher from here if I bought, or offer it lower from here if I sold. That's all it's saying. Now, they're either going to come or they're not. And so, as a result, I don't look at this as being a right or wrong. I look at this as how much distance am I going to give the market to move away from my entry point to tell me that they're either going to come or they're not, and any further is not worth the money of finding out, not worth the cost of finding out. That's all it means.
Do you talk about stop losses? You talk about stop losses and management in your DVD.
Yeah, absolutely, but not like very specific. Not the kind of specifics that like if you're in a half an hour time frame, how much.
Well, that's the trader's decision.
Yeah,
but the trader, dependent upon their trade style, is going to adjust their stops according to their account size, according to the risk tolerance, etc. Right. What you do, I think, is give people an understanding and a basis of where they should be placing their risk, or how much, not from a dollar perspective, but maybe from a
yeah, in other words, so that they can, yes, from a mental perspective, so that they can adjust their trading style in a way that conforms to where they're at in terms of their ability to take the risk.
Would one exercise be for a trader to begin testing out their loss? In other words, take a $100 loss, see how you feel. If you were able to take a $100 loss and walk away and not fret too much about it, not let it stress out the rest of your trading day and not think about it, maybe then you could say, okay, I'm willing to trade a more volatile stock and move to something like a $200 or $300 loss, etc. Is that an exercise you think would be beneficial?
Oh, absolutely. Yeah, absolutely. I mean, and that's what I suggest to people, all the time. Especially, when I was doing coaching, it's like, and when I was doing coaching on an active basis, I mean, I was coaching some pretty substantial money managers, and they'd get into a situation where they're on a pretty good losing streak, and often it required that they actually go back to a risk level that they hadn't. Meaning that if they were trading 10,000 or 100,000 shares, or willing to take $500,000 or $1 million hit on a trade, to get back to where they felt more in sync with the market, that they may have had to go back to only trading 1,000 shares. And see, and when you're working in a corporate situation like that, with other traders, that's often a hard thing to do, but that's exactly what they needed to do. I suggest to people that I mean, look at it this way: paper trading. Okay, paper. A lot of people who teach trading say that there's no point in someone paper trading, because there's oftentimes a huge difference between the results they'll experience paper trading and what they'll experience when their real money's on the line. Yeah, because there's no real money on the line. In other words, I'm sure there are probably a substantial number of viewers out there who can make consistent money following their methodology, paper trading, and then they start doing real trading, and everything changes. Okay, well, and so a lot of teachers have said, well, there's no point in paper trading because there's no correlation between the results. Well, that's not really true, because what paper trading can do for people is very beneficial. One, it's a graphic demonstration of the gap that exists in terms of mental skills that they need to acquire. In other words, it's a good way to get familiarize yourself with your trading platform. It's a good way to really get confident with your methodology, but more so, it is a graphic representation of the mental skills that you don't have. That's an interesting concept. Yeah. So in other words, how does someone convince themselves that they need those mental skills? Look at your paper trading. Look at your paper trading in relationship to your real trading. Now, if there's and a lot of this, even if people have learned to think in probabilities, which is what we've been talking about pretty much this whole time, even if people learn to think in probabilities, it doesn't mean that they can really still accept the loss, right? Because the way our minds think. In other words, if I have to take a loss on this trade, it could have the tendency to tap me into all the accumulative kind of negative pain of every time I've had to take a loss in my life. And it just doesn't mean in trading. It could mean, pets or what, people and that sort of thing, or jobs. And so, because our minds have this tendencies to associate, it can make it difficult to accept the loss. So a lot of times what people would have to do, and they also would find difficult to do, because a lot of times people get into trading because they want to impress their friends or their family, like, I'm a trader. Right. But what they might have to do is that when they graduate from paper trading, they might just, the amount of risk tolerance they have might only be just 10 shares, and risking $1 on those 10 shares. And you think, well, what's the point of that? Well, the point of that is that, when you can trade those 10 shares flawlessly, based on whatever your methodology says, and do it without any fear or
because you were able to make those trades in the paper. I mean, you made those trades in the paper.
Then you can go to 20 shares and see how that feels. Then you go to 30 and gradually work your way up. And people aren't willing to gradually work their way up.
This is a concept that we've never even talked about. I've never actually heard it put this way, Mark. I have to be honest with you, where you look at your paper trading account as kind of almost your goal, if you will. Almost like, this is where I could be if I was trading from a carefree state of mind.
Absolutely. It's perfect. This is where I could be if I had that carefree state of mind. If I had the mental skills that allowed me to do exactly what I need to do without reservation, without hesitation, without fear. That's the way that we can, and that's, and that's basically what we're getting at. How do we use the methodology that we have and the capability and the potential of that methodology to its maximum? You need the mental skills to do it.
You made reference before, both at Wise Fest and earlier we talked about some events of pain in your life, and a lot of our traders right now feeling some pain with what's been happening in the markets the past couple of weeks. Mark, is there Does a person have to experience this, a total drawdown in their account, a total loss in their account where their account's almost wiped out or is totally wiped out for them to make that change in their mind? I mean, does that have to happen? Does it have to be traumatic like that for them to realize, oh, I've got to change something? I'm saying this, and obviously it can be done without that, but have you found that predominantly out there, in the people you've taught over the years, have people had to experience a high level of trauma before they can actually make the change? Or can someone just in the normal course of every day with a little bit of dedication actually? And I'm not trying to be rhetorical here. I really want a serious answer, because there's people out there right now that I'm sure are thinking the same thing. Do I have to lose my whole account? Does this have to happen for me to make a
You aren't in pain right now, are you, Jared?
What's that? Yeah. I'm good. I've been out in the market all
I'm
week.
just kidding. Yeah, well, you mean like the gutter principle?
Yeah.
Is that what you're referring
No,
to?
explain the gutter principle.
The gutter principle, in other words, how much in the gutter do you have to be before you're willing to say, I'll do anything? Mm-hmm. As a matter of fact, this kind of brings something up. Is that when I was actively coaching, my coaching clientele basically fell into two broad categories. One was with traders who were already successful, who were already consistent, and what they wanted were, they wanted fine tuning. Okay, they wanted creative ways of fine tuning themselves so that they could actually increase the amount of money that they make over a year, or whatever. And then you had the other group was they're literally in the emotional gutter. Okay, they're so exasperated. They're so frustrated because of the potential it's so obvious what the potential is. And yet there seems to be these invisible barriers that keep them from getting into that potential. That they come to me saying, I'll do anything. And that's, now everyone has different tolerances of pain before they get to the point where they say, I'll do anything, and mean it, and be sincere, and mean it. That's the whole thing. They got to mean it.
Mark, we're wrapping up the show. We have a couple more minutes now. There was a couple points I know you wanted to make before we end up the show. And guys, just so you know, next show we're going to open up to phone calls and emails. So if you want to start lining up your emails or your phone calls, do that now. Mark, a couple more minutes to go. In this arena, I mean, is there any message you can give to our traders or any final thoughts, maybe a mantra, something?
No, just basically just to kind of sum up what we've been talking about, that if consistent results are your objective, then you're going to have to learn how to think like a professional trader, because that's what they do. They make consistent results. That's why they're pros. That's why people give them their money to manage. That's why they have jobs where they actually trade for a living, because if they didn't make consistent results, they wouldn't keep their jobs. And so to do that, you have to learn to change the way you think about trading in a way where it doesn't cause you to have this potential to think that you're going to be disappointed or betrayed or put you into a state of emotional pain. It's like getting to that carefree state of mind. And once you get to that, once you shift your perspective, everything changes. It's not about being right or wrong. And when you really understand that, and then you go through the process of learning how to accept the risk of losing, then everything about your trading will change.
So when the patterns present themselves, you trade them.
You trade. You don't think about it. There's nothing to think about. It's like, don't think. There's nothing to think about.
And you trade within your means.
Except the risk and how you're going to take profits. But I'm saying the pattern itself, when the pattern presents itself, there's absolutely nothing to think about.
That is the objective part about trading.
You can know. Yes, there's no way you can know what the outcome's going to be.
Mark, we do have another hour, like I said,
okay.
So we've got plenty more time to go. One last thing I wanted to ask you real quick. We've used this word edge a couple of times.
Right.
A lot of our traders are not familiar with this word edge. I've used it on the floor. Edge to us was basically having a spread in there. In other words, if we had an option that was worth $1, the ability to buy it for 90 cents or sell it for $1.10. Mm-hmm. How do you define edge as a closing thought?
Just simply, an edge is just a higher probability of one thing happening over another. That's all. Just a higher probability of one thing happening over another. But keep in mind that within the context of what we've been talking about, it's a higher probability happening over another over a series of trades. A series, okay? So in other words, like for example, what I do is I teach people to trade in sample sizes.
Right.
So that instead of saying to themselves, I'm going to take the next trade, I'm going to take the next 20 trades.
Right. I'm going to keep myself in the game.
I'm going to keep myself in the game and see what happens over the next 20 trades. And then if I get the kind of results that I like, I'll take another 20. If I don't, I'll tweak my methodology so that I get better resuls.
Mark, it's been great. We'll see you back in a couple minutes. Guys,
Okay.
it is time for a break. We want you to get your questions in for Mark. You can give us a call at 1-866-WTV-WISE. That's 1-866-988-9493. Or you can send us an email to trader@wisetradetv.com. When we come back, we will answer your questions and talk more about psychology in today's markets. We'll see you back here in 5 minutes.
Jared are still here and ready to answer your questions. You can give us a call at 1-866-WTV-WISE. That's 1-866-988-9493. Or you can email us to trader@wisetradetv.com. Guys, Mark, that was a great show. I loved all the information you gave everyone.
Thank you, Susan. Thank you very
you
much.
so much for being here. I know at Wise Fest everybody was thrilled to actually get to meet you and see you in person. So it's a special pleasure to have you as a special on WTV.
Thank you.
All right, thanks, Mark. See you. So yeah, this was really the price action we had here for the week, and I usually stop trading at 2:30, so I could stop right here. But yeah, let's go back over it real quick, right? You see we had a few setups. I would say we only had about 1 to 3 high probability setups though. I think I'll change this one. This one's decent. So we got the chart key. If anyone needs it, follow along, right? We'll add in whatever else we're seeing once we're going over it real quick. Some fair value gaps. I learned some order blocks from Coach Amy today. Didn't know that before. So I mean, you know, I don't know anything about that. How can I say I know everything when I'm learning new stuff every day? Insane. I'm like, order blocks, fair value gaps, I don't know what those are. She's like, you don't? I use them all the time. I'm like, damn, I should probably check this out. You can see we just kind of went into a range for the rest of the day. If you're still trading, this setup definitely looks nice right here. If you're still trading later on, get a little wave, but you get that little fail breakout, that higher low. And now we're on today's price action. Let's draw this up real quick. You see, if I can't find it from the front, I'll find them from the back. I keep finding you. Who's that?
Get the cat.
Get the cat. Get the cat. Get the cat. Somebody who's good. Get away and come. I want the holy bro.
Get the cat.
Alright, so even from now, right, I'll be looking for a pattern like this. Continue back higher. Or maybe a little ranging, but we got an uptrend, so I'm looking for that break new extreme. I guess this is what Coach Amy would call a order block. Or technically fair value gap as well. You see, I just slowly add what I'm learning. See if it's right, you know. I'm not gonna trade it off the rip, but I'm gonna add my strategy. Imagine I see an end of a second leg coming down in here. I'd like to use that bounce. Hell yeah. You know? But right now I got this high. I got a break below, so this is my zero, right? That's why I'm always putting the green zero there. This is my high. Make this bad boy big. And this is my low. So again, you guys can see, once again, every time I feel, I'm gonna be on repeat about it, of course, but drawing these trend lines, man, can really keep you on the right price, just even here, trend line, everybody's even looking to reverse, thinking this is the end of the up move, but if you have this trend line, we're technically supposed to get this high before we reverse. Then right after that, we just come in and get a leg down, maybe even shorter because we reverse here, so right there. And we come in, we get another leg down. Right here you're looking for reversal as well. Because I'm either looking for break new extreme of the trend line, and you can see there's a trend line here as well, right? But I'm looking for the break new extreme, or if I can realize the two-legged move, this is the connection pattern we're talking about, right? So take notice, we've been seeing this. So I'm also always researching for the pattern of the day. Alright, so let's go over this stuff. Let's get it. Alright, so you can see we start with price here. Boom, we started in an uptrend. Right here we needed an uptrend break, new extreme. Then we got another uptrend. See, I don't draw all of them, it gets a little cluttered until we're going over it. We got another uptrend too, right? That also needs the same thing. Remember, every trend line should potentially get a break new extreme. When the trend line doesn't get a break new extreme, you need to check out why. That might just be another leg down, So right here, even, right? So I got this bottom here, zero. This is the first entry short, pull back, pull back, pull back. This is the second entry short. Solid trade, that green bar. Let me mark this. So, it's an inside bar, that's why I still mark it debatable, but hey, enter this trade right here. You enter right as soon as this bar closes. You would enter one tick above it. So your entry would be here, stop loss would go a couple points below the red bar, right? Because it's an inside bar. So that's why we have to, it's basically a double bar entry. So you're gonna wanna put your stop loss maybe at 45. Your target is at least to 190. You enter it, this is at one at night, but still, just, even if this shows up during the day, this is what you wanna take. Then you come back here, right? You get a higher low, but it's just so close to the high already. And we're looking for potential reversal. When it's so close to the high, I really want to see, just a little bit more space, or at least a little bit more context that we've definitely been going up. Here, we're just starting the up move. I don't really have context that we're just pressuring up, but if you want to risk it, you could also enter here. You'd enter right there above that bar. Stop would go to maybe 48. Ride it out, boom. So I'm always, even if I'm not in a trade, I'm looking for the targets, because that could, when I see another trade, that could really entice me to get in on that one. So now from this low, I already had a first entry short, pull back, second entry short, right? I'm not entering here. But then when it comes back to the EMA right here and give me a higher low, I'm definitely interested, right? Decent bar, a little wick at the top, but that's alright. Higher low, looking for a continuation of this leg, right? You got one leg here, now you're looking for a second leg from here. Boom. We keep going up, right? Now we got an overshoot of this white trend. That's the brick, right? We got the brick. We're looking for reversal. Once we get this brick, we don't know it's gonna automatically reverse or where, but the brick, that's what that means, right? That's telling me, okay, we got the overshoot, we're gonna get some bearish pressure, you know? And so I'm just gonna chill until I see the bearish pressure clearly play out. Or, you know, you can keep playing with it, but, you know, I usually just really want to see the bearish pressure play out. And then we get all this ranging, right? Double top, reverse. Okay, when I get this trend line that has a break and a new extreme, and I can, this is what we call visual two-legged move, right? I can visually see these two legs. Like, visually you can see it. So even from here, you can kind of already see the pattern too. Now this pattern, it might not make sense to a lot of people now, but it basically expands and contracts, right? This is it expanded. We're gonna see it later contracted a couple times, and then it's gonna expand again. Like, these are just certain things that I see in the market, right? Just from watching it all the time, I guess. So from here at about 9:38, you can find that from right here, right? So you can keep that in mind. That's all I do. I just keep it in mind. I'm like, all right, this is what I'm looking for. 2 legs down, and then we're gonna keep going, you know, continuing today. Okay, I keep going, right? I'm looking, expecting reversal here. You know, I don't usually like to jump on these reversals, especially after these legs down. You could if you wanted to, but even like right here, you know, people already started buying. At least wait for them to try it once, maybe the second time if you always want to try. You could also say, you know, all the way from the left here, last support area. So again, I'll mark that for anybody trying to be aggressive. Enter there. We got this trend line looking for the break, right? Everybody's still trying to reverse. We know we should be getting new extreme, right? We should be going up here. So we sit this out. Okay, here we go. We got this 1 leg down. We know we're supposed to get second leg. So this is what I mean by, that's why I wanted to draw this one. Look at this same pattern, how I'm gonna shrink it, and then you can see the same thing, right? That's the top, this is the bottom, this is that little piece, and you bring this up. Right? Isn't this the same exact thing? Now this is expanded, this is contracted. See what I mean? But you gotta be able to recognize that. It's a little, you know, not the easiest, but you could recognize it after a little while. So now, if you're being aggressive again, you could enter here. I wouldn't enter on this big bar, right? If you really want to, you could enter on this one. If not that one, definitely on this one, right? Nice higher low. So again, I wait for the bars to close and I enter right above, 1 tick above, stop loss a few points below. So again, these type of trades, right? I still mark them as low probability because for me, you're so close to these highs that have been getting dropped down. But if you want to, you enter right there, a couple points below, boom. This one right here, right? This is a lower high and a little failed breakout action. So if you're still, you know, thinking down because of this 2-legged move playing up, you could potentially think about this down move. And once the bar closes again, you enter right below, a few points above, target basically almost hit, you would get out that. Hopefully you get out, you know, or you might get stopped out because of how they instantly reverse, but hopefully you would get out looking at this support area from the left, right? You would see like, oh, we're just coming into this area. You would definitely want to try to protect, hopefully. Okay, we keep going, we reverse, we get another 2-legged move up, right? So just as we're getting this pattern down, notice how we're also low-key getting the pattern up, right? 1 leg, pull back, 2nd leg. So again, now we can see how many variations. It's going down, it's going up, it's getting they're shrinking it, right? They're making it bigger. Just notice that, back and forth. Right, here we go. What do we have here? We can see the same pattern, right? I'm gonna leave all of them down here. So we can see all the variations we have so far. So we pull this one up, right? This one goes right here. This is the end of the move. We're right back in the support area, right? So what are we thinking? Yeah, we could easily reverse from here, right? Automatically, you should be thinking. So when you get this green bar, yeah, when the bar closes, you know, if you want to, you enter right above. So you would enter at 82, 83. Stop loss would be 66. And you're looking for 218. Just gotta sit and wait for your target. Stop loss is all the way down here, so nothing. You know, this is why we don't move our stop to break even. I don't move my stop to break even if I think it's a real high probability trade. I'm not moving it to break even. If there's a sign for, you know, price to come down, yeah, but trade like this, your potential upside is so big, like you just gotta accept this risk. You're really just banking on this support area just coming to play, right? And when it closes out of it, you want to enter above. So again, your target got hit. You would have entered here maybe at 10-11, and you're out of this trade potentially. If you're not out here at 10-22, so 11-minute trade, you're out here at about 10:30, so maybe 20-minute trade. And this is what I'm working on myself, right? I want to be able to stay in my trades, find the trend line, stay in through the break, wait for the new extreme, then move my stop. Working on it. Working on it every day. And again, if you're in here, right, when you see this first entry, let's see, second entry, and then a higher low off this break and retest area. Also, this blue area is a fair value gap all the way from the left, right? But again, just retesting this other little yellow box here that we have. You can see why we'd enter this one, and then we come back up. We have basically the same pattern backwards, right? See that white? That's the pattern. This is the high. We get a first entry long. This bar breaks below, right? And then comes back up. Anything breaks above here is going to be our second entry long. Definitely like that. This trade here, if now this is our zero, we got a higher low looking to break out, right? Basically broke out of this area here, retested in here. It looked a little funky on definitely live, I could say that, because I remember I had another resistance area here. So I was even more so thinking of the triple test. So I'm glad I didn't. What saved me is that I was saying to myself, man, I don't really want to enter above the 21. I really wanted to see the bar close below the 21 and didn't, so I didn't take it. But hey, maybe I should have been seeing and being able to capitalize right here or right here next time. That's why we're doing this, right? Learn. Got an uptrend, break, looking for new extreme. So we already know what we're looking for, right? We're looking for this pattern to come alive in between right here. Looking for this pattern right here to come alive somehow. Leg down, push back up, right? Leg down, but we don't get the leg down, so we just get that foam, like basically just a little retest. So if you get that green bar and you want to take it, or you want to take above this red bar, you got to enter here, stop here. Let's see what your target is. Duke.
Yeah. Oh man.
No what? Must be Duke. I know it.
We just turn around and we look for the ball and the ball get shot like a friend.
No, what's wrong with him?
Smuggler.
Oh, smuggler. Okay, so this is a prime time setup right here, right? Because this is our top. We get one break below, first entry, pull back. This is going to be our second. Now we're a little below the EMA, and why it's not fully green for me is just because this bar didn't even turn green. And we just broke a little below the 21. That's tough. Like, why couldn't we just hold, you know, and come back? But hey, when you see this area right here that was resistance turning into support, then you could potentially definitely check it out, right? this green trade here we really like because it's a break and retest 31 inside, and this one is definitely solid as well. You know what, I'm gonna say we should turn this one green, simply because now to the fact, right, when we really taking this pattern into this, like, you know, into account, this is really a solid one, so mark that one green. And this one, man, if it would just close above the 21, definitely would have been green. Alright, so now we're going, we find another uptrend. What are we looking for? Break, new extreme, we know potential reversal. Now, I marked this setup red because if you're just, you know, let's say you're thinking, alright, we're getting an uptrend, and you're not seeing that this white trend line has an overshoot, right? This is why I always want to show you guys why I'm drawing. This white trend line right here has this overshoot. That means it's a brick. It has a brick. That means we're gonna get some bearish pressure. Now that means I should be careful, even if I get a setup, to know that the bears are gonna come in strong and try to trap me, right? And I should really take into consideration any type of downtrend that's in play, or any type of down move that's in play. I should really take it into consideration. Now, we know we've been seeing this pattern as well. Maybe that helps us, right? Because we know we've been getting the pullback pattern. It's the two-legged pullback, basically, of this, and then break down. So maybe that saves us from not being involved at all, right? But this looks like such a good setup if you're just counting for the setup. Like, look, you're just counting the bottom here, 0. You're like, okay, first entry short, pullback, second entry short. They even give us, since here, see, this is the signal bar we want right here. This is what I mean. I am always patient for my setup because I know they'll give it, right? This signal bar we want right here above the 21. We want basically this here. So look how they give it to you here. Why? Just to trick you to try to enter here. You're looking for it to keep going, but if you got the brick, you know, okay, reversal, and you got the new extreme already, right? You know, triple things. All right, let me just skip this trade. Even if it works, let me get a break right here and then a retest, right? Instead of trying that one, because like I said, you know the bearish pressure should be coming in.
Right.
All right, so boom, and that's exactly what they do, right? They do that two-legged move down. Now you're thinking, hey, reversal, right? Because we've been seeing this. So now when I see, once again, we're getting a break of a resistance area turning into support. When I get this higher low right here, maybe I try it out. Try to enter. I know it's not above the 21 yet, but if I'm playing the pattern and the support area, try it out. You enter one tick above here. Stop loss goes a few points, so maybe 25. Enter at 37. You're in. You're looking for 260, so you'd still be in this trade. Target hit. Yeah, maybe you move your stop loss, or you're trailing 21, so maybe you're still in. If you're in here, right, this is the bottom, here's 0, you get first entry, pullback second, so this is your 0. Then you get a higher low right here. Potentially you might try that if you think the move is still going, because you can see they clearly got people here selling to trap. Bar top didn't change color, but hey, we're thinking reversal from this move here. From all this context and seeing this, we're thinking reversal. Got an uptrend, right? Got a break, people start selling. I'm still thinking reversal. Now, here's where I try to show you guys how they switch up the pattern on you sometimes. We've been seeing this pattern all day, down move, right? Look how they shrink the pattern. So this part is expanded, but this part here is contracted. What I mean by that is we still got the leg down, we still got the one leg up. Now we just have a super short. Same thing, right? Now this leg is just super short, and this leg is longer than usual. Where this leg was shorter than usual, this leg is longer than usual. So it's like they flip it. Past kind of like 11, 12. Now it's like the pattern starts to flip a little bit. right? Because now we have a long leg first and then a short leg. So if you recognize that in time, maybe you try this. I didn't try it because I really wanted a little more of the signal bar, even like this much more, 50, not like a little bit more. I didn't really like that, but hey, if you want to be aggressive, you try it out. You're in there, target hit. Right, now I got this uptrend, so from here I'm thinking up move, from here I'm thinking up move. Here now you should be thinking up move, right? Now I marked this trade, but hey, we wouldn't have got stopped out, or we wouldn't have entered the trade, because like I said, I wait for bar close, right? And then I look to enter when it breaks above this bar. Notice we never break above that bar, so hey, would have been good. So we could even delete that. But we got this uptrend, we got a break, new extreme. Now here's where we're taking this into play, right? You see this already holding the 21. It broke below, instantly flipped back up. Now we got here, new extreme. We're looking for reversal, but at the same time, I got 0 here, first entry short, pull back, second entry short. So second entry short right here, 0. Then I got what? First entry short, pull back, second entry short. Now, I don't have an overshoot like here, right? I got a new extreme, but look at how the EMA is really holding right here. And this is such a small bar. You know, you want to try this from 300 down to 293. Yeah, this is not even 10 points. You definitely want to try this, right? Especially if you're thinking what? Okay, we started going up, so I got this leg here. I got this leg, boom. Right? So that would be your target, the end of that leg. And then when you see this start to hold, you definitely want to try it out, right? Now, what can you also add? When I start seeing this hold, I would real quick just come in here, try to draw a trend line like this at least. Right, at first, I would just be seeing if it's going to be like that, right off the rip. Like, okay, maybe this is going to be a bigger trend line, right? Okay, so now you get, even if it's a bigger trend line, now you get a break, and now you get this higher low. Now, if you don't try this one because you're worried about, this is why you know every trade is different. Right here, this is different context. And right here, even if you took this trade, you know, this is still a decent setup. You just got to add this little piece of context. That's what's pushing us down, the brick. Here, we got no brick. We got nothing. Perfect trend line up. We're just looking for a reversal here. And you know, I said to myself, okay, after we got this big trend, but even before, right, if you're just thinking this is the trend line, I'm going to put that trend back after, but even if you're thinking this is the trend line right here, bring this down a little. Oh no, it's messing around. So even if this is the trend line, right, you still got break 2 legs up, like this. So either way, you should still be thinking up, regardless, right? However you have this trend line. Like I said, I think it's more so a wider one because we're really expecting a big reversal. Right, after the fact. So it's either way. I'll put both of them so you guys see what I'm talking about. So that's why sometimes the trend lines are also subjective, because it's just to help you stay on the right side. Either way, whichever one of these you have, you're going to end up staying on the right side. You know what I'm saying? And then you're still going to end up getting to this conclusion here, especially if you have this range box, right? When I draw this top here, when I see this top reverse, and I have this bottom, I'm immediately drawing this range, and then I can see only not this is a good test, this is now a triple test, so I'm taking this. Enter right above here, right? Stop loss down here. Looking for target to keep going. Now, when you're in this trade, you see them trying to do a failed breakout, you might look to take your profit, right? Now, if you're really confident in it, you're just holding the trade, but I might look to take my profit because I might be thinking break new extreme, you know? Could always get back in later, but here I'm thinking, okay, possibly break new extreme. I gotta watch out. And this keeps going, so maybe now I'm drawing a trend like this, just to potentially be like, oh, hey, maybe we get that, right? Now, when I'm watching this, if I have this trend line here perfect, now this is definitely a break of the trend line. Not only is this a break, this is also from here, right? 0, 1, 2, 0, 1, 2. This is my 0. I got a first entry short, pullback. This is a second entry short. Above the EMA, getting rejected. Not only that, I got a break and a retest, right? Of this whole area. This is perfect. Love this trade. Looking back at this trade when I see it now, this is just perfect. You enter as soon as this bar closes, enter one tick above, stop loss down here, 304. You're looking for target of 56. You would enter this trade at 105. Your target gets hit here at about 118. You know, but for me, you're still in the trade, you know. You're looking for break new extreme. Okay, you start trailing it tightly here. You trail the 21. You could possibly get a real nice runner if you're trailing the 21. Alright? You keep going up here. So this is your 0. You got a first entry short, second entry short, 0. You get a first entry short, come back up, second entry short, 0. Here you get basically higher low off the 21. If you're just thinking this is a strong trend, right, you can see this every time this thing kind of comes to the 21, just breaking, boom, close to it, boom, breaking it. This is super close, breaking it, so you might try it out. And you notice this is green, this is kind of more so, you know, because of the signal bar, more so yellow. Here these are green, yellow, because, you know, you're just really thinking, again, strong trend, thinking in probability, we should keep going, but definitely not a perfect setup, right? Here you go again, you get a 0, first entry short, pull back. This doesn't break the low, so this is actually a second entry short. Decent signal bar, not the best, right? So low probability still, but you would still be thinking, I got this trend right here. I'm thinking for a new extreme at least. I got room to the high. Enter one tick here, stop goes here, right? Perfect, because your high is the target of your trade. Boom, you'd be good. Now again, we see the pattern of the day, right? This two-legged move down, I'm thinking reversal. I also got this range, so if I got this range pretty decent, you might think failed breakout. Take that one. And you're thinking reversal because, you know, break, new extreme, right? And the two-legged move played out. You're looking for at least the two-legged move of this up move right here. Now remember, this is random, but like I said, it's random in the path, right? You still got an uptrend that should be helping you to keep on the right side right here. Throughout all these pushes down, right? You got these uptrends, so you're like, hey, break new extreme, not quite yet, almost got it right here, but then trend line is EMA is in play, right? And you want to see a stronger new extreme. You got these two legs down, so you're looking for two legs up. 0, first entry short, pull back, second entry short even comes into play here, right? You wouldn't be in because it didn't break above, right? Comes back down, and you basically get a triple test off this area. This green bar is interesting too. You might check it out because technically you just have a small little range. So if you want, you could check it out. If you're really thinking about this two-legged move, why not? Right? You're thinking we're gonna break out of this range. we're just gonna go back to the top. But yeah, so again, I'm usually done trading around this time, but you can see this is why we were bouncing here, right? Boom, we came back down. Even here you get a 0 first entry pullback off the top of the range. Decent bar again. Enter one tick above. And we kind of get a dirty little retest inside this bigger range now, right? Right, while we're always drawing, you got two ranges here. So boom. This may be the last trade. But yeah, so there we go, guys. This was Friday. Alright, so you can see why I've been over here working, right? We got one pullback. Now I got a second. Now you gotta expand. Alright, we might still get a push off here. But that was it, guys. Yo, again, give me a 3 if we're getting some clarity and you guys are really understanding these things. I know it's not easy, but at least from the rip, you can see how I'm thinking, why I would be thinking this, why I would be thinking that. You guys got this. Alright? Great stuff, great stuff. I'll see y'all tomorrow for this 50K challenge. Let's get it. That's it, baby.
Nice flow. Roach gang. Yeah. Let's get it. Let's get it. Let's get it. Roach gang. 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 Yeah. Under the fridge is where I'm saying. Ooh, bitch, you know I ain't playing. Yeah. I like water with sugar cane. Ooh, nuclear bomb out of Bill Payne. Yeah. I can't fly cause I'm not a plane. Ooh, I like crumbs and candy stains. Yeah. Roach gang. Roach gang. Roach gang. Roach gang. Roach gang. Roach gang. Under the bridge is where I'm staying. Ooh, bitch, you know I ain't playing. Yeah. I like water with sugar